the danger nobody tells you about the trendy new investments.
Welcome, weary wanderers of the financial wilderness, to Finance Unfiltered, the only place where we dare to speak the inconvenient truths about your money. Today, we are tearing into a topic that has lured countless hopefuls with its glittering promise. A phenomenon as old as greed itself, yet continuously repackaged with dazzling new ribbons. The trendy new investments. You have seen the headlines, you have heard the whispers, you have probably even felt that unsettling pang of fear of missing out. As everyone around you seems to be getting rich overnight, we are talking about everything from the latest digital tokens promising decentralized utopias to obscure, meme-driven assets that defy all conventional logic. But what if we told you there is a hidden cost, a danger nobody dares to mention when they are busy selling you on the dream? In this unfiltered exposé, we are going beyond the glossy brochures and the influencer hype to unmask the deceptive layers of risk lurking. Beneath these seemingly irresistible opportunities, we will dissect the seductive narratives, expose the often fragile foundations, and confront the brutal, unspoken truth, the devastating losses that accompany these financial fads. Prepare to challenge everything you thought you knew about market trends and discover why the conventional wisdom, that comforting bedrock of financial planning, often falls spectacularly flat in this chaotic new investment landscape. It is not just about making money, it is about keeping it from evaporating into thin air. So, if you are tired of being led astray by the siren song of instant wealth, if you are ready to arm yourself with the knowledge to discern legitimate opportunity from speculative delusion, then stick around. We are about to equip you with a strategic framework for prudent investing, designed to fortify your future against the next wave of financial frenzy. This is not just a video, it is your essential guide to navigating the perilous waters of modern finance. Presented with the characteristic sarcasm, acid wit, and brutal honesty you have come to expect from Finance Unfiltered. Let us begin.
The irresistible siren song of instant wealth.
Today, we delve into a topic as old as human ambition, yet continuously repackaged with dazzling new ribbons. The irresistible siren song of instant wealth. Ah, yes, the whispered promise. That tantalizing scent of riches achieved without the tedious inconvenience of actual labor or, heaven forbid, patience. It is the financial equivalent of a magic beanstalk, isn't it? Plant a seed of your hard-earned cash, recite a few incantations from Reddit, and presto. A sprawling castle in the clouds, filled with untold treasures, awaits. This is not a new phenomenon, but it is one that has found its most potent amplifier in our hyper-connected, dopamine-addicted world. Every few years, a new financial marvel emerges from the digital ether, or perhaps from the dusty annals of market history, rebranded and relaunched with unprecedented fervor. We are told with breathless enthusiasm that this time it is different. This asset class is a paradigm shift. This technological breakthrough will render all previous investment wisdom utterly obsolete. And naturally, those who fail to board this express train to Easy Street are not merely missing an opportunity. They are demonstrating a shocking lack of vision, a lamentable adherence to outdated principles, or perhaps a fundamental inability to grasp the future. It is not just about making money. It is about being part of the revolution, the vanguard of the financially enlightened. Consider the landscape. A dizzying array of digital tokens promising decentralized utopias. Obscure biotech startups with groundbreaking but not yet proven therapies. Or perhaps even meme-driven stocks propelled by the collective chaotic energy of online forums. Each of these, in its nascent stage, often comes wrapped in a narrative of underdog triumph. A David versus Goliath battle against the entrenched financial establishment. Who would not want to stand with David, especially when David is promising a Lambo by next Tuesday? The allure is undeniable. It preys upon a primal human desire, the yearning for liberation from the daily grind, the dream of telling your boss precisely where they can file their TPS reports. It is the capitalist fantasy distilled to its purest, most intoxicating form. And the narrative? Oh, the narrative. It is crafted by masters of persuasion, whether they be sophisticated marketing firms or simply a fervent army of anonymous online evangelists. They paint vivid pictures of overnight millionaires, of ordinary individuals who staked a small sum, and watched it balloon into life-altering wealth. They parade these success stories, often without context or the accompanying tales of devastating loss, as incontrovertible proof of the new investment's inherent genius. It is a powerful emotional trigger, activating what behavioral economists politely refer to as fear of missing out, or FOMO to the uninitiated. This fear is not merely about missing profit, it is about missing out on a future, a lifestyle, an escape. It is the terror of watching everyone else sail off into the sunset of financial independence while you remain chained to your desk, clacking away at your keyboard, perpetually behind. This siren song does not just whisper. It shouts from every digital billboard, every trending hashtag, every influencer's meticulously curated feed. You are bombarded with stories of audacious gains, often presented as the norm rather than the extreme outliers they truly are. The underlying mechanism, the actual economic viability. The inherent risks, these are often relegated to footnotes, if they are mentioned at all. Instead, the focus remains firmly on the potential upside. The tantalizing prospect of transforming pocket change into a pension fund. It is the financial world's equivalent of a casino's flashing lights and celebratory bells. Designed to obscure the quiet, consistent hum of the house always winning, they want you to believe that the rules have changed, that the old guard is clueless, and that you, with your nascent understanding and a healthy dose of digital courage, are perfectly positioned to seize this unprecedented opportunity. But let us be unfiltered here for a moment. If it truly were that simple, if instant wealth were truly achievable through a few clicks and a leap of faith into the latest digital frontier, then why are there still so many of us toiling away? Why are financial advisors still peddling diversified portfolios and long-term strategies? The answer, of course, is both simple and profoundly inconvenient, because the path to sustainable wealth is rarely paved with instant gratification. The siren song of instant wealth is potent because it promises to short-circuit the arduous process of true value creation. It promises to deliver the destination without the journey. And that, my friends, is precisely where the danger begins. Because behind every promise of effortless fortune, there lurks a reality far more complex, far more unforgiving, and often far more devastating. Stay with us, because next, we'll start unmasking those deceptive layers of risk that nobody bothers to mention when they are busy selling you on the dream.
Beyond the hype, unmasking the deceptive layers of risk.
We just discussed the siren song, that hypnotic melody of instant wealth that lures so many unsuspecting investors onto the rocks of ruin. Now it is time to venture beyond the hype, unmasking the deceptive layers of risk. Because let us be brutally honest, my friends, the danger with these shiny new investment opportunities is rarely advertised on the glossy brochures or in the breathless pronouncements of their loudest evangelists. No, the true perils are meticulously, almost artfully obscured. They are the financial equivalent of a Russian nesting doll, each seemingly harmless layer concealing a more precarious one beneath. The first deceptive layer, and perhaps the most insidious, is the illusion of simplicity. Many of these trendy investments, be they obscure altcoins, fractionalized assets of dubious provenance, or highly leveraged derivatives dressed up as accessible products, are presented as revolutionary yet straightforward. Just buy and hold, they exclaim. It is as easy as pushing a button. This narrative deliberately bypasses the intricate, often opaque underlying mechanics. Investors are encouraged to focus solely on the potential upside. Treating complex financial instruments like lottery tickets, you would not buy a house without understanding the mortgage, the property taxes, or the structural integrity, would you? Or at least you should not. Yet, countless individuals plunge into these new investments with less due diligence than they apply to selecting a new brand of toothpaste. The sheer audacity of this oversimplification, coupled with the profound ignorance it fosters, is itself a colossal risk. Then there is the veneer of innovation, masking a lack of fundamental value. We are constantly told that these new investments are disrupting traditional finance, offering solutions to problems we did not even know we had. Sometimes, this is true. More often, however, the innovation is skin-deep, a fresh coat of digital paint on an old, rickety wagon. The underlying asset may be entirely speculative. Its value derived not from productive economic activity, but from the collective delusion that it will be worth more tomorrow. It is the classic greater fool theory, repackaged for the digital age. I will buy this overpriced thing because I am confident some even greater fool will come along and pay more for it. The risk here is not just that the price might go down, it is that the asset might inherently possess little to no actual value beyond its perceived scarcity or novelty. When the music stops, as it inevitably does, the last person holding the bag discovers its true, regrettable emptiness. Next, we encounter the wild, unregulated West. Many of these new frontiers of finance operate in a regulatory gray area, or entirely outside established financial oversight. This might sound appealing to the libertarian-minded, the anti-establishment crowd who chafes at traditional banking. But let us trade idealism for reality. Regulations exist for a reason. They protect you, the individual investor, from outright fraud, manipulation, and insolvency. In unregulated spaces, consumer protections are often non-existent. If something goes wrong, your funds disappear, the platform gets hacked. The creators vanish, you have little to no recourse. There is no FDIC insurance for your meme coin portfolio, no SEC to investigate the suspicious pump and dump scheme you just fell prey to. It is an environment ripe for scams, rug pulls, and sophisticated cons, where the only rule seems to be buyer beware, often shouted just as the trap snaps shut. Furthermore, we must talk about liquidity, or rather the alarming lack thereof. It is deceptively easy to get into these trendy investments. A few clicks, a quick transfer. And suddenly, you are a proud owner of whatever digital trinket or esoteric share is currently trending. But what happens when you want to get out? When the market turns sour, or you simply need your money back for an actual emergency, you might find yourself trapped. The market for these assets can be thin, volatile, or even non-existent when prices are falling. That instant liquidity you enjoyed on the way in can evaporate, leaving you with assets you cannot sell or can only sell at a devastating loss. Investment becomes a frozen block of capital. It's inaccessible and diminishing, while your real-world bills continue to pile up. Finally, consider the behavioral biases weaponized against you. The architects of hype understand human psychology perfectly. They tap into FOMO, greed, and the human tendency to believe positive anecdotes over statistical probabilities. They create echo chambers where dissent is silenced and success stories are amplified. They promote a narrative of financial empowerment while subtly disarming your critical faculties. The risk here is not just external, it is internal. It is the risk that your own emotions, fueled by carefully curated hype, will override your rational judgment, leading you to make decisions you would never entertain under calmer, less frenzied circumstances. So, when someone tells you this time it is different, or you just do not understand the future, pause. Take a deep breath, then remember this. Beneath the shiny new wrapping, the technological jargon, and the promises of untold riches, there are almost always hidden layers of risk designed to extract wealth from the hopeful and transfer it to the savvy. And next, we will explore the very real, often devastating consequences of ignoring these uncomfortable truths.
The unspoken truth, devastating losses from financial fads.
We have navigated the shimmering illusions of instant wealth and peeled back the deceptive layers of risk that these trendy new investments so cunningly deploy. Now, it is time for the uncomfortable, often whispered, truth. It is time for the unspoken truth. Devastating losses from financial fads. Because while the cheerleaders of the latest speculative craze are quick to trumpet the meteoric rises, the incredible gains, and the mythical overnight millionaires, they are remarkably silent about the financial carnage left in their wake. They are deafeningly quiet when it comes to the people who lose not just a little, but everything. Let us dispense with euphemisms. We are not talking about minor corrections or a slight dip in portfolio value. We are talking about the kind of gut-wrenching, soul-crushing loss that makes you stare blankly at your screen, wondering if you are experiencing a particularly cruel dream. This is the moment your hope, painstakingly cultivated by 1,000 online gurus and breathless news headlines, shatters into a million pieces. This is when the revolutionary technology or the next big thing reveals itself for what it truly was: a speculative bubble bloated beyond all reason. It's propelled by pure, unadulterated hype. and designed to enrich the few at the expense of the many. Imagine, if you will, the typical scenario. You saw your friend, your colleague, or perhaps a particularly persuasive influencer on a platform with short-form videos touting their incredible gains. Get in now, they urged, before it is too late. Fear of missing out, that primal financial terror, gnaws at you. You read a few articles, mostly positive of course, because who wants to read about boring old fundamentals when there is a rocket ship launching? You commit a portion of your savings, maybe a small sum at first, which quickly balloons thanks to some initial upward momentum. This is it. You think I am finally smart enough to get ahead? You invest more, perhaps dipping into emergency funds, be even taking out a loan, convinced you are catching the wave of a lifetime. Then the narrative shifts. Slowly at first, imperceptibly. A small dip is just a healthy correction. A larger drop is weak hands, selling off an opportunity to buy the dip and show your conviction. The gurus reassure you. The online community doubles down, chanting hodl. Hold on for dear life, for those unfamiliar with the desperate mantra of a plummeting asset. But the dip keeps dipping. The correction becomes a freefall. And the revolutionary asset you bought with such conviction starts to look an awful lot like a worthless digital token. Sure, a share in a company with no discernible revenue, or a piece of a glorified digital rock. The devastating losses come in many forms. Sometimes it is the outright rug pull, where the creators of the project simply vanish with the investors' funds, leaving behind an empty smart contract and a trail of broken dreams. Sometimes it is the slow, agonizing bleed, where your initial investment depreciates day after day, week after week, until it represents a fraction of its former self, a painful monument to your poor judgment. Other times, it is the sudden, catastrophic crash, triggered by a regulatory crackdown, a market-wide panic, or simply the collective realization that the emperor has no clothes. These losses are devastating not just for the numbers on a screen, but for the tangible impact on real lives. We are talking about lost down payments for homes, vanished college savings, dreams of early retirement dissolving into thin air. We are talking about the crushing weight of regret, the shame that often accompanies admitting you were swept up in a financial frenzy. People do not readily broadcast their financial failures. They do not post about their losses with the same enthusiasm they do about their ephemeral gains. This creates a dangerous feedback loop where only the success stories are visible, fueling the illusion that everyone else is winning and further encouraging others to throw their hats into the ring. The promoters of these fads, the venture capitalists who cashed out early, the influencers who got paid to shill, they are long gone, counting their profits. They move on to the next shiny object, leaving the retail investor, the everyday person who dared to dream of instant wealth, holding a very expensive, very empty bag. This is the unspoken truth. For every single person who became rich on these fads, there are dozens, if not hundreds, who lost a significant portion of their financial security. Their stories are not glamorous. They do not generate clicks or sell courses. But their experiences are the true cost of embracing reckless speculation over sound financial principles. So, when the next can't-miss opportunity arises, promising exponential gains with minimal effort, remember these unspoken truths. Remember the real human cost. Because while the siren song of instant wealth is loud and enticing, the mournful dirge of devastating loss is often played in the lonely silence of a depleted bank account. Next, we will explore why the old rules of engagement simply are not cutting it in this new, wild financial landscape.
Why conventional wisdom fails in the new investment landscape.
We have seen the intoxicating allure of instant wealth and peeled back the opaque layers of risk, even grimly cataloged the devastating losses. Now, let us tackle a question that gnaws at the very foundations of financial literacy. Why conventional wisdom fails in the new investment landscape? Ah, yes, conventional wisdom. That soothing balm of diversification, dollar-cost averaging, and buy low. Sell high. The pronouncements of seasoned veterans, the dusty textbooks, the sage advice of your financially responsible uncle, all of it seemingly rendered obsolete by a rogue tweet or a collective online frenzy. For decades, the financial gospel was clear. Invest for the long term. Diversify your portfolio across a variety of asset classes. Focus on fundamentals, earnings, balance sheets, management quality. Avoid speculative bubbles. Patience is a virtue. Buy dividend stocks. Time in the market beats timing the market, they would solemnly declare, stroking their metaphorical beards. And for a very long time, this was, broadly speaking, excellent advice. It built generational wealth, it navigated recessions, and it kept countless investors from doing something truly foolish. It was the sensible, perhaps boring, path to prosperity. But then, something shifted, or perhaps rather the speed of everything accelerated exponentially. Suddenly, companies with no profits were valued in the billions. Digital tokens with no intrinsic value surged to astronomical heights. A single social media post could trigger a stampede of retail investors, sending obscure stocks soaring by hundreds of percentage points in a matter of hours. And the gurus of conventional wisdom? They stood on the sidelines, clutching their spreadsheets, muttering about irrational exuberance and Ponzi schemes. They looked rather out of touch, did they not? Like a horse and buggy salesman trying to explain the internal combustion engine. This created a chasm, a gaping maw between the old guard and the new money. The Young Turks. Fueled by screenshots of dizzying gains and an almost religious belief in decentralization, scoffed at the slow, methodical approach. Diversification? They snickered. That is how you get average returns in an extraordinary market. Fundamentals? They questioned. My asset is a community, a movement, a lifestyle. You cannot put that on a balance sheet, boomer. And long-term, please? That is for people who have not figured out how to 10x their portfolio before breakfast. The perceived failure of conventional wisdom stems from several factors. Firstly, the speed of information and capital flow. In the age of instant communication, market movements are no longer dictated solely by quarterly reports or economic data. They are influenced by sentiment, by memes, by the collective attention span of millions of interconnected individuals. A stock can be pumped by a coordinated online effort faster than any traditional analyst can publish a research note. Secondly, the democratization of access to complex financial instruments. Tools that were once exclusive to institutional investors are now available to anyone with a smartphone, often with zero commission fees. This lowers the barrier to entry for highly speculative bets, encouraging a gambler's mentality rather than an investor's discipline. Thirdly, the rise of intangible assets and speculative narratives. When the value of an asset is primarily driven by belief, by a story, rather than by tangible cash flows or proven utility, traditional valuation models simply break down. How do you apply a discounted cash flow analysis to a digital picture of a monkey? The answer, of course, is that you cannot. You are not investing. You are speculating on human psychology and the propagation of a narrative. And finally, the pervasive influence of social media. Financial advice, or rather, financial suggestion, is no longer confined to licensed professionals. It is dispensed freely, often irresponsibly, by anonymous accounts and self-proclaimed experts whose only credential is a screenshot of a winning trade, never mind the dozens of losing ones. So, does this mean conventional wisdom is utterly useless? Are we to throw out decades of financial prudence and embrace the chaos? Not so fast, my dear friend. The conventional wisdom does not necessarily fail as much as it is often misunderstood or misapplied in these novel contexts. It fails to provide the quick, dopamine-fueled thrill that many are now seeking. It fails to offer a magic bullet for overnight riches. It fails to make sense of markets driven by collective delusion rather than economic realities. But the core tenets, risk management, understanding what you own, avoiding leverage you cannot afford, and focusing on long-term value, these are not obsolete. They are simply shouted down by the cacophony of immediate gratification. The problem is not necessarily with the wisdom itself, but with the expectation that it should predict or capitalize on every speculative frenzy. Conventional wisdom was designed to protect and build wealth steadily, not to turn you into an instant billionaire. It is like expecting a sturdy, reliable family sedan to win a Formula One race. It is a different tool for a different purpose. While the new investment landscape might make the sedan feel ponderous and slow, it is still the vehicle most likely to get you to your destination in one piece. The danger lies in discarding the reliable for the flashy, simply because the flashy is currently making more noise. Next, we will discuss how to fortify your financial future amidst this chaotic symphony. Because ignoring the chaos is no longer an option, but neither is succumbing to its irrational allure.
Fortifying your future, a strategic framework for prudent investing.
We have journeyed through the tantalizing mirage of instant wealth, stripped bare the cunning disguises of risk, and stared unflinchingly into the abyss of devastating losses. You have seen the financial battleground, littered with the wreckage of shattered dreams and depleted portfolios. Now, it is time to arm ourselves. It is time for fortifying your future, a strategic framework for prudent investing. Because while the wild west of trendy investments is not going to magically disappear, you do not have to be another casualty. You can, in fact, build an impenetrable financial fortress, or at the very least, a very well-defended bunker. Let us be clear, this is not about telling you to shy away from every innovation, to hide your money under a mattress though. Considering recent events, some might argue for its merits. It is about understanding that in a landscape where traditional advice seems to falter, a new, more robust approach is required. It is about equipping yourself with the intellectual and emotional tools to navigate the cacophony of hype, the endless parade of next big things, and the insidious whispers that you are missing out. This framework is your shield, your compass, and your very necessary dose of cynicism in a world that thrives on irrational exuberance. First, your primary weapon, your impregnable defense, must be relentless education. Before you even think about clicking buy on the latest blockchain-powered AI-driven metaverse-integrated digital pet rock, you must do your homework. And no, reading a single bullish Reddit thread or watching a YouTube video from someone who just bought a new yacht does not count. Understand the underlying technology, if there is any. Understand the business model if it exists. Understand the risks, not just the potential rewards. If you cannot explain what you are investing in to a moderately intelligent 10-year-old, then you do not understand it well enough. Period. The ape-together strong mentality works wonders for short-term pumps, but it is an express train to financial ruin for those who fail to comprehend the fundamentals. Your ignorance is their profit. Do not donate to their cause. Second, cultivate unflinching self-awareness regarding your true risk tolerance. Everyone, and I mean everyone, believes they have a high risk tolerance when the market is going up. During a bull run, watching your portfolio inflate feels like genius. But the real test, the moment of truth, comes when your investment plummets by 30%, 50%, or even 90%. Can you sleep at night? Can you still function? Or are you consumed by panic, forced to sell at the absolute bottom, thereby locking in maximum losses? Be brutally honest with yourself. Your risk tolerance is not what you can theoretically endure. It is what you can actually endure without unraveling your entire life. If a significant loss would financially or mentally cripple you, then you have no business playing with highly speculative assets. Third, despite what the get-rich-quick evangelists might tell you, diversification remains your steadfast ally. Yes, it is boring. Yes, it might mean you do not hit a home run on every single speculative play. But diversification is not about hitting home runs. It is about ensuring you do not strike out permanently. It is the financial equivalent of wearing a seatbelt. It may not make the journey more exciting, but it dramatically increases your chances of surviving an unexpected crash, spreading your capital across different asset classes, traditional stocks, bonds, real estate. And then, perhaps a small, carefully considered allocation to more speculative ventures is the bedrock of financial security. It protects you from the idiosyncratic risks of any single asset class or any single fashionable fad. Fourth, for those who simply cannot resist the allure of the new, the shiny, the potentially revolutionary, embrace the concept of play money. This is capital you are genuinely prepared to lose entirely without it impacting your core financial goals, your retirement, your children's education, your emergency fund. Consider it tuition for the school of hard knocks, or perhaps simply entertainment. If you are going to gamble, at least know you are gambling. Never, under any circumstances, use funds earmarked for essential life needs for speculative investments. This is where prudence diverges from recklessness. Have a small, defined allocation, for example, 5% or less of your total investable assets for these higher-risk, higher-reward ventures. Once that money is allocated, treat it as gone. Any gains are a bonus. Any losses are a lesson learned without devastating consequences. Fifth, cultivate an ironclad immunity to FOMO and herd mentality. This is perhaps the most challenging, as it taps into deep psychological triggers. When everyone around you is getting rich, it takes immense discipline to resist the urge to jump in. Remind yourself that by the time a speculative asset is widely discussed and heavily promoted on social media, much of its exponential growth has likely already occurred. You are not an early adopter. You're often the liquidity for the early adopters. Be a skeptic, not a lemming. Question the narratives. Understand that the loudest voices often have the most to gain from your participation, regardless of your outcome. Finally, and crucially, always have an exit strategy. This is not a casino where you stay until you are broke or a millionaire. What are your profit targets? What is your maximum acceptable loss? Set these parameters before you invest and stick to them with unwavering discipline. Greed often prevents people from taking profits, while denial prevents them from cutting losses. A predefined plan removes emotion from the equation, ensuring you do not become a deer in the headlights when the market inevitably turns. Fortifying your future is not about being boring. It is about being resilient. It is about understanding that while the financial world constantly evolves, the fundamental principles of risk management, due diligence, and emotional discipline remain timeless. They are your anchor in a sea of speculative frenzy. So, arm yourself with knowledge, temper your emotions with strategy, and remember that true wealth is built not on fleeting fads, but on solid, well-defended foundations. Your future self will thank you for it. A final, resonant chord fades. Your gaze is direct, unwavering, a subtle challenge in your eyes as you lean slightly forward, ready to deliver the ultimate takeaway.
The antidote to get rich quick. Your unfiltered financial defense.
We have pulled back the curtain, my friends, on the tantalizing but ultimately perilous world of trendy new investments. We chase the irresistible siren song of instant wealth, only to discover its treacherous reefs of obscured risks. We witnessed the devastating losses inflicted upon those who succumbed, and watched as conventional wisdom seemed to flail against the torrent of hype. But more importantly, we have laid out the strategic framework to fortify your financial future, transforming you from a potential victim into a discerning, well-armored investor. The choice is now yours. Continue to chase the mirage of effortless riches, or arm yourself with the unfiltered truth and build something genuinely enduring. This is not about crushing your dreams of prosperity. It is about grounding them in reality. It is about understanding that true, sustainable wealth is rarely, if ever, achieved through blind speculation or the slavish pursuit of the latest fleeting fad. It demands relentless education, brutal self-honesty about your risk tolerance, the humble embrace of diversification, the strategic use of play money, and an unshakable immunity to the contagious disease of FOMO. You now possess the insights to navigate the digital chaos, to identify the wolves in sheep's clothing, and to differentiate between genuine innovation and mere speculative froth. Use this knowledge to your advantage to protect your hard-earned capital, and to carve out a path that is resilient, responsible, and truly your own. So if this unfiltered dose of reality resonated with you, if you are tired of the financial fairy tales and ready for the unvarnished truth, then it is time to act. Do not let these critical insights gather dust. Make them the foundation of your financial decisions. Be sure to hit that like button if you found this conversation valuable. Share it with anyone still caught in the endless loop of get-rich-quick schemes. And most importantly, subscribe to Finance Unfiltered for more brutal honesty. Drop a comment below with your thoughts on these trendy investments. Let us keep the conversation filtered and focused on building real wealth.